Wouldn't vehicle insurance rates decrease to reflect the lower underwriting risk if Elon were to reduce accidents by 50% when compared to human drivers? This would have a negative effect on Jayco's profits, float, and possibly margins as well. Let's use the most extreme case, shall we? Assume that for some strange reason, there will only be 3 accidents in the US in the upcoming year. Costs will go down with everything that lowers accidents, but this has been more difficult than people anticipated. But if it actually does, the numbers and our data will demonstrate it, and the prices will decrease. Everyone, welcome back. We're exploring the titan of the financial industry, Warren Buffett, and his recent seismic remarks. His shocking comments against Tesla have just left everyone stunned, and they could have a huge impact on the stock's future. Let's explore the surprisingly exciting field of insurance. You read correctly. Insurance can be an exciting ride, particularly when industry heavyweights like Warren Buffett and Elon Musk are discussing Tesla's self-driving technology and its ramifications for society. Imagine this now. The Oracle of Omaha and investment expert Warren Buffett recently asked what he thought would happen to auto insurance in a world where Tesla's self-driving technology takes center stage. He believes that if Tesla's driverless cars cut down on collisions by a staggering 50%, it may be fantastic for public safety, but a huge setback for insurance firms. Less demand for insurance results from fewer crashes, which causes the insurance industry's volume to decline. Buffett acknowledges that what is detrimental to insurance may actually be beneficial to society in his usual wisecracking way. Subsequently, Elon Musk unexpectedly tweets that Buffett might want to hedge his chances and buy Tesla stock. Typical Elon, transforming a convoluted argument into a stock recommendation. However, let's not forget the past blunders when industry titans like Uber and GM attempted to enter the insurance market and got their financial wires twisted before you call your broker. Their insurance fantasies became terrifying losses due to mispricing risks. Moving on to Tesla, they are storing data like a squirrel with nuts before winter arrives, in addition to manufacturing automobiles. From how quickly you drive to how abruptly you brake when that same squirrel jumps across the road, they monitor every detail. Yes, insurance always appears simpler than it actually is. Because you get the money up front and then discover later whether you made a mistake, it's a lot of fun. However, when someone offers you money and you give them a small piece of paper, it's actually a very alluring business. A 50% decrease in accidents will benefit society while negatively impacting the volume of insurance companies. However, we are seeking for something that is beneficial to society. With all this tasty data, Tesla imagines a future in which their self-driving technology not only keeps squirrels away from your car, but also lowers your insurance costs. Everyone could benefit from cheaper prices and a more comfortable ride, though perhaps not the typical insurance executives, who might find themselves perspiring more than a long-tailed cat in a room full of rocking chairs. What's coming up next, then? A possible upheaval in the insurance sector, as traditional insurers may face significant adjustments if fewer accidents and smarter automobiles occur. However, Buffett notes that it won't be an easy switch to make the shift to this future. Tesla will need time to accumulate enough data and kilometers to refine their technology. As you are likely already aware, Tesla is engineering its cars. These aren't your typical vehicles. They were created with autonomy in mind, reducing the likelihood that you will switch paint with another motorist. Once autonomy becomes the main source of moving the car around the environment, the likelihood that you will be the cause of an accident will significantly decrease. It's quite recent for Tesla, by the way. I would add that prior to version 12, the miles traveled were not increasing at the rate or slope that Tesla preferred. Version 12 caused that hockey stick, and the free trial is undoubtedly assisting in that regard. By improving vehicle performance and lowering the likelihood of collisions, Tesla is guiding us towards a safer future. As he watches from the outside, Warren Buffett may be wondering how these developments might affect his own business. After all, the demand for conventional auto insurance declines in tandem with the number of incidents. Buffett may want to consider protecting his investments from these technological disruptions. My point with Tesla is that their technology does reduce the number of accidents, and that is definitely verifiable. But it's also important to keep in mind that the expense of fixing each of these incidents has increased dramatically. I don't think the overall number has decreased as much as Tesla would like us to think if you multiplied the number of accidents by the cost of each one. However, the journey to independent nirvana is not without its challenges. Even though Tesla's technology is lowering the frequency of accidents, fixing the ones that do occur is typically more costly. You ask, why? Because these high-tech chariots are loaded with expensive, complex equipment. Therefore, each fender bender strikes the wallet harder than previously, even though we're seeing fewer of them. The financial gains we anticipate from fewer accidents may be hampered by this. What's even more intriguing is that Tesla is expanding beyond automobile manufacturing. They might be preparing to directly upend the insurance sector. Consider a scenario in which your insurance is also provided by the manufacturer of your vehicle. By transferring some of the insurance load onto the shoulders of the equipment provider, Tesla's entrance into insurance may not only cover repairs, but also transform the way that obligations are divided between auto owners and the corporations that manufacture them. Yes, Tesla is redefining the industry. Given this changing environment, it is obvious that the trajectory Tesla is following could result in a new paradigm for automotive economics. Conventional insurers may have to adjust their approaches or risk falling behind the electric vehicle revolution. Now fast forward to the mechanics of Tesla's cars, which are not just intelligent, but also made to be as affordable as they are beautiful. Tesla has changed its approach to repairs by designing its self-driving processors and parts in a more modular manner. This implies that we have tidy, interchangeable modules under the hood rather than a tangled mess. As it turns out, fixing these high-tech components isn't as expensive as we had anticipated. Therefore, you might be pleasantly surprised if you assumed that fixing a Tesla would be extremely expensive, possibly even involving your own kid. Let's do a little math now. Individual repairs may not cost as much as previously thought, but lowering the frequency of repairs in the first place is what actually lowers overall expenditures. Over time, the overall cost of repairs may actually go down as fewer accidents occur as a result of improved driving technology. This is a victory lap for sustainability and safety, not just for your pocketbook. It took more than 3 years to reach 1 billion FSD miles. It will take less than 3 months to reach 2 billion miles. We'll have to wait and watch if the question of how many billions of miles are being driven at this moment continues to rise. The computation is adding wildly. We are getting close to escape velocity. Then he claimed that 7 crashes a day are now avoided as a result. 7 crashes a day is the current state of supervised FSD. This includes 4 collisions per day with FSD turned on, less the 11 anticipated human crashes that were avoided. According to Sawyer, that equates to 15 million miles every day, or 1 life saved each week. Actually, 1.35. Whoa. This analysis they just done is fantastic, and I hope it's accurate. With just FSD supervised beta testers, 1 person's life may be spared each week. Let's talk about milestones in relation to safety. Not only is Tesla's comprehensive self-driving program saving lives, but it is also accumulating kilometers. With more than 1.5 billion miles driven and on track to reach 2 billion, Tesla's FSD technology is averting almost 7 collisions every day. Yes, you read correctly. Artificial intelligence prevents 7 possible metal crumples every day. The worst part is that, according to statistical research, this marvel of contemporary technology may be saving 1 life per week. While enjoying your morning coffee, just give that some thought. It's possible that Tesla's FSD is out there acting heroic. The Tesla adventure doesn't end there, though. It's much more fascinating because every day is a new discovery with ups and downs. For this reason, Tesla continues to attract more and more investors.